Hello friends. Let's start today's analysis. Market has broken down today, so let's see if you could take the proper trade today and make some benefit of this huge movement. So what happened, as we generally do before starting, we analyze the previous day is like it was sideways for half of the day, then it went up. So this line is the PDL, previous day low, and this is previous day high. But you have to again note one thing, that previous day high or a high to previous day before. So both the highs, that has to be treated as big resistance because market fell from this point. So this is a supply zone. So PDH is a supply zone, and yesterday in fact we took the trade here which was break even. So now let's see what happens. Today is the narrow CPR. Narrow CPR usually means that market will go in one direction. It may give a big move. It's usually a trending day or a zigzag day. So to make it simpler, on a narrow day we have to see, we have to just identify where the market is trying to go. Now the first candle was bearish here, but it is there is no short trade because there is immediate CPR support and it closed here. Although CPR is narrow, but unless the CPR is broken we cannot take the trade. Then market tried to consolidate and then it went up. Now as a as a what you say, as a rule, yesterday also I told you, when there is a first candle is red candle and then market goes up, then again it comes down, we have to wait till market reaches this point, and then how it behaves. It tries to sustain or it tries to break it. So if tries to sustain, that means it's a W pattern, like what happened yesterday. Yesterday first candle was red and then market went up, and then again it came down this point, from this point it up. But today what happened is, you have to see the W pattern and M pattern, like these patterns, they are high probability on a wide CPR days, not wide or average CPR days, not on a narrow CPR. Today is a narrow CPR. That is first point. Second point is, you have to analyze at this point the low of this, how market is behaving. If market is trying to break it, that means it can go in that direction. If market is trying to sustain, like what yesterday it did, market took a support here, made a bullish candle, then that's a signal that we can go long. But today it did not happen. Market broke it decisively. Breaking means it's a solid candle, and somewhere, usually whenever the breakout happens, like the level is broken, means the candle, half candle is up and half candle is down. In that cases it's a high breakout, and like something must have happened in the market, some news or whatever, but it is giving you an indication that this is a strong breakout. And it broke the like, you know, 1 2 3 4 5 6 7 7 8 tiny candles low. This tiny candles means market was trying to resist this level. It was not breaking. Moreover, there was a CPR support. It went up also, but how decisively it is broken, look. And one more way to identify this is I'll tell you, when you want to identify the direction of the market, you just have to you have to make the initial range, like, you know, this was the initial range somewhere. Okay, this is, let us treat this box is a initial range. Even you can consider this. Okay, now in this case you will say market, this candle has broken it, but you see from this candle up to here there is no consolidation. It is back to back green candle. So this is not a, like, this is kind of a parabolic breakout, and whenever the candle breaks it and the top there is a wicks, it means although it is broken, there is a selling pressure here. And the selling pressure, again you see this line, this is a selling zone. As I told you yesterday, selling zone or supply zone or demand zone is not a line. You have to understand that now this point, this is your, sorry, this is, look here, supply zone is like this is your supply zone from this candle to this candle. And just to make it more visible, I will fill it with red. So this is the supply zone. From the supply zone you get a confirmation on this candle. This is your 10-10 candle. From this candle it is reversing, so this is called as supply zone reversal pattern, or you can say red candle reversal pattern. Now let me see, it's better we write supply zone reversal pattern. This pattern is very simple. This is like whenever the the market Nifty comes to the supply zone and makes a proper bearish candle, here you should go long, short. So from this point, and then your target should be days low. So here is your target. But more than that, you see here the initial range is broken by this candle. This is such a huge candle. Okay, this range was broken here. Okay, now this was first trade. Second trade is on this candle. This candle, there are 2-3 setups form here, or strategies you can take. This is the range breakout trade, or this is like W pattern breakout trade, or this is a CPR breakout trade. Okay, although these are back to back red candles, but these are tiny candles. Tiny candles is not a parabolic. When you have a proper breakout, and to minimize your risk, you can do one thing. I will just put this short trade. This is the perfect shorting opportunity. You enter here, and there are 3 types of stop loss. One is above the CPR, one is above this candle, and one is above this day's high. Okay, above the day's high you can take when you want to trade the trade, like you are like a positional trader. You say now market cannot go up because it is broken decisively, so at the end of the day somewhere it will reach my target. That time you can take this. But if you are like a scalping trader, means you want immediate profit and you want to get out of it, you don't want to hold your trade and take the risk, so you can go above the candle or above the CPR. So let's say the safe one is above the candle. Now above the candle, and we have to make twice the stop loss our target. So let's go down, and yeah, around risk reward is 2. So around here on this pivot, that's your target. Now you got a big move, and this target is also achieved. Now if you remember yesterday, day before, I have in my yesterday's video I have mentioned about the gap border. And what is the gap border? This is the gap border. Okay, this is the gap border. The gap border was formed because there was a gap up here, and the market did not close below this, so this gap was formed. Now with this gap, if you see here, the gap border are very strong support or resistance. So in this case it will be a support, and because as I told you, you have to check how market behaves near the gap border. Like previous sessions, it took the support. Okay, it took the support here, it took the support here, it took the support here, but this today it broke it. Okay, there was no chance of taking support, but breaking was like, if you see this candle, the 1035 candle, it is huge candle. If you take the entry here and stop loss above, it will be big stop loss, and it is not broken as with this candle. Like the center of the candle is a breakout point. Here it's hardly like small point is going below this, so that's not a proper breakout. So and then the in such cases, if it is breaking up in like parabolic move, you have to wait for the retracement. What is the retracement? Means again the market should come to this point. So this point means here the this was the low, so this is like a we have to extend this is called as support. This is our demand zone. Okay, so when your market comes and touches to this point and again shows like retracement, it goes back and again it gives, like once you miss this opportunity, okay, second opportunity is when market retraces. Market tried from here, it goes up here, but this candle then again it reverses. So this is called retracement. Okay, this is retracement. Even even this point is retracement here. This is also retracement. So you can take the trade. If you miss this trade, you can take this trade here. You go short, take your stop loss on top of this, and twice the stop loss is your target. Now first trade, the big trade is hit. In fact, this was the second trade, it is hit. If you want to go third trade is only either here or here, no other places. So let us consider third trade, whether we hit our target or we have to take the stop loss. So worst case, check here. Now when you keep it here, the safe stop loss will be above this support area. So now twice the stop loss is your target. Yeah, here exactly the gap border, you know, this gap border. Now if you remember, yesterday I was telling you that market has a tendency to fill the gaps. Market doesn't like gaps. So I told you maybe today, tomorrow, in future it will fill this gap, and we don't have to wait for long time. Today itself market closed the gap. There was a gap formed, this big gap was formed, and market somehow closed the gap. And in that also we have to find an opportunity, but with a logic and strategy, not like every red or every green candle you should go short or long. Okay. So this trade also hits, like this trade will be hit on, yeah, this candle. Okay, so we had 3 trades today, all the 3 hit the targets. The first one is not so, you can say, first trade is also with all the setups and strategies, but the big trade was the second trade. Second trade was the main trade. Like whenever there is a trade in the market for that day, there will be one main trade. So today's market, the center of attraction or center of the trade, or you can say the heart of today's trading, was the second trade. So every day there will be one trade on which the market behaves. That is the foundation of that day's making chart or pattern or strategy that we have to. Sometimes it is zigzag. It's not that always market has to make some patterns. So we have to identify which day are zigzag, which day market is not respecting any of the patterns, any of the strategies. That day we have to be out of the market. And market is like a fire, we should be out if we can't control it. So that's it, guys. Hope you are learning something, and if you have any questions, any doubts, you can write to me on comments. I will try to resolve it. So that's it. Bye bye, take care.